Well, hello and welcome to everyone here on YouTube. Let's get into the weekly update. So we ran right into that downward sloping channel line that I spoke to you guys about. I said this could act as resistance. That's exactly what happened. And also we're still seeing right now the OBV, on balance volume, which is showing that selling pressure is still exceeding buying pressure right now. So we've run into that. We've also run into the 200-day moving average, something else I spoke about last week. We ran into that. We've got a new opening range now, 4266 on the upside, 4218 on the downside. A daily close below or above those levels will be bullish or bearish, right? Above 4266. But even if it does get above that, I need it to have two daily closes above the 200 for me to get bullish. But if it does close below 4218, then yeah, we could be moving down. Right? I think that's probably the path of least resistance. I mean, there's a gap to fill right here. In fact, the exact gap to fill would be 4112 on the SPX. So we could be coming down to fill this gap. Bit of a pullback right now. A lot of stocks are very overbought. The market was overbought and it was due for a pullback. I spoke about that last week as well. So we'll keep a close eye on that. And, the 200-day moving average, which I spoke about last week, the SPX ran into that. The NASDAQ didn't even get there, and that's pulling back. The Russell 2000, which looks strong, that's now pulled back significantly from the 200-day moving average. The Dow Jones Industrials, the 30 stocks, representing the largest industries in the economy. That has now just closed below the 200-day moving average as well. And also the Dow Jones Transports has closed below the 200-day moving average also. So that's certainly acted as a resistance, and we are seeing the markets pull back as we speak. The dollar has had another rally higher, right? Starting to move higher again. I do expect some sort of a move down in the near future, but for now, we are moving higher. Now, if we look here at the bonds, let's get rid of that. The 10-year, maybe we could have a bit more of a move up here, but I do ultimately see this going back down to around 2%. So if that does happen, then we should see that rally in TLT. So we'll be keeping a close eye on that as well. Now, as far as this week's news goes, the Jackson Hole, we're going to be keeping a close eye on that as well. Any news coming out of there? New home sales, okay, durable goods orders, pending home sales, crude oil inventories, quite a bit happening. Jerome Powell will be speaking. Yeah, so quite a lot going on this week as far as news goes. But in the meantime, it does look short term that the market is bearish. Now, I spoke last week about this position with Marathon Digital, and I said, look, you could set it up one of two ways. You could set up the 20 strike out of the money call, just doing a straight covered call, or you could set it up as a 15 strike in the money. Now, it's pulled all the way back to just above $13, a big move down from where it was when we got in 18. Big pullback with Bitcoin as well, obviously. So if you've sold the 15 in the money, just continue to hold, right? There's nothing to do. But if you sold the out of the money 20 call, what you could do now, you sold it for $201. You could buy it back, close it out for 38 cents, right? You've got most of the profit out of it already. Then keep the same strike, but roll it out to the 21st of October. We've always got the option to roll down later if we want to, but for now, I'd roll that out at the same strike, same amount of contracts out to the 21st of October, and that would reduce my break even down to 1557. Right now, the riot trade that we got into, remember the riot trade I told you guys about, where we bought the stock, we did an in the money covered call, very similar to what we did here with Marathon. That just closed out on Friday for a 14.1% return in a month. So that was a great trade. This one is looking pretty good as well. Now, is it possible, Sean, for me to trade Tesla with a small amount of money? Absolutely, it is, right? One of the things you can do is something called a butterfly. So let's have a look at this. If I just type in Tesla here and click on stock, and then what we do is we've got strategy builder. We've clicked on that. We're going to plus that so we can see all the option chains, see what's going on. Right now, we can see a lot of open interest when we're looking here. Not so much No, is this the one I was thinking of? Yeah, it is, right? So the 900 strike, right? A lot of times, now this is only to the 26th of August, okay? The 6 days from now, right? So the 900 strike has the most open interest in the calls and the puts, okay? So we're getting a lot of open interest at the calls and the puts. So the stock could pin there, right? It could actually pin at that price. Doesn't have to pin there exactly for me to make good money here, but what I'm looking to do is I'm going to sell the 900, I'm going to buy the 930, and I'm going to buy the 870. So 30 above, 30 below. The one I'm selling, the 900, where I'm expecting the stock to move to pin to, I'm going to sell two of those. So sell two, buy two. One $30 above, one $30 below. I would get there at a limit price there of $6, right? Because it's going to cost you $600 to place the trade. That's right, a $600 trade on a $900 Tesla stock. Pretty incredible, right? So it's got a tent here. So I need it to stay between the break even. So if I'm getting filled at $6, the trade's going to cost me $600. My risk is $600. My break even is $6 minus $930, so $924, and $6 my limit price plus $870, so $876. So I needed to stay between $876 and $924, my two break evens, for the next 5 days. Obviously it's a weekend now, but 5 days, actual trading days, and I can make an incredible return. I could make $2,400 in 5 days on a $600 risk. Pretty amazing. Now, I wouldn't try and take the maximum risk, the maximum profit of 2,400. What I would do is I would actually do something like this. Once I'd placed the trade, I would then come here and I would go to this one here, right? So I would set it at the profit taker of 18 and the stop at 3, right? So you're looking to make 1,200 and you're risking 300. Okay, if you want to let me know how you set these up with the profit takers and make them as set and forget trades. How good is that? Set and forget. There's the actual trade there. Only for 5 days. Looking for it to stay within 924 and the 876 range. Anywhere in between there for the next 5 days, and we are going to make money. If we could make 4 to 1 in our money, asymmetrical trade, in 5 days, that's going to be a pretty good result, right? We're not looking to get the maximum. We're looking to get around $1,200 in profit here. So we're setting the limit at 18, the profit taker at 18, and the stop at $3, okay? And entering at $6, okay? So that's an interesting trade. We just did one of these last week and it made 288% in 4 days. So pretty good trade, right? So these type of things work really well. We do stuff like this all the time. We really start to utilize the power and versatility of options, and that's how you really become a great trader and be able to take advantage of all type of market conditions, whether it's moving up, moving down, whatever the case is. It is a beautiful thing. Now, that's how I would set that trade up. All right, anyway, that's just an idea. I hope you guys like that. Keep an eye on the news coming out this week and the opening range. Very important, the opening range. Are we going to come back and fill that gap and go into bearish opening range? My 10-point checklist tells me things are neutral right now. Let's wait and see, and I'll talk to you guys again next week. All the best, and bye for now.